friends, now let us discuss about the amendments in your payment chapter. So when you talk about your payment chapter, the first few amendments are not so important. You will find an amendment in your electronic liability ledger rule 85. So when you see your rule 85 sub rule 2 in your electronic liability ledger, they have removed something which was not at all relevant. Please understand that now there is no concept of matching, right? So if you are going to see returns chapter, you will find that section 42 and section 43 mismatch is no more there, and when mismatch is not there, there is no question of interest on mismatch. So when mismatch itself is not there, understand that mismatch concept was never there right from the beginning of GST. It was just in provisions. You never had GSTR2 concept, you never had matching concept. When you never had GSTR2 concept, what they are doing after about more than 5 years, they are removing GSTR2, and what they are doing, wherever there was reference of match and mismatch, they are removing it. So from your exam point of view, this doesn't really make any sense. Just understand that this is only a correction amendment where you never had any concept called as matching or GSTR2. Here specifically you are talking about matching, section 42, section 43. When those provisions are removed, automatically the reference of these provisions in other places like your rule 85 sub rule 2 needs to be removed. Likewise, when you talk about the next rule and section, when you are talking about the electronic credit ledger, which is section 49, read along with your rule 86. Now we are going to focus both on section as well as rule. Section 49 read along with the rule 86. Again, certain corrections which are done. So basically these correction provisions you will never find in a question paper. Just to know that there are amendments, we are discussing that. Otherwise, from your exam perspective, it is of no use whatsoever. You have an correction amendment in section 49 too, where they were talking about your section 43A. Now this reference of section 43A is removed for a very simple reason that section 43A was talking about restrictions on input tax credit. It was never ever notified, and now restriction of input tax credit is there in section 38 itself. So when section 43A is no more there, when you don't have section 43A, reference to section 43A in section 49 subsection 2 doesn't make any sense. That is being removed. Even when you see the next provision, section 49 subsection 4. Now it talks about a scenario where it is talking about restrictions while using input tax credit. So if you see the wordings there, the amount available in electronic credit ledger which is to be used for making payment towards your output tax under this act or IGST, under IGST Act, is subject to conditions and restrictions. Previously it was only conditions, now they are focusing on the word even restrictions. So it is merely clarificatory in nature. So there are not only conditions for using your input tax credit, there are only even restrictions. One of the restrictions that you have is your rule 86B. Now in that particular restriction, though you have huge input tax credit more than your output tax, but still if you are covered by rule 86B, you can use only 99%, you can pay only 99% of output tax by credit ledger, 1% of output tax you have to pay by your cash ledger. So there are the restrictions. Again, only a correction amendment. You don't expect any questions from this particular provision as well. Then you have one of the restriction of using your input tax credit, section 49 subsection 12, which is a backup for a rule which was already there. So just now we have discussed about your rule 86B, which is all about restriction on utilization of credit. Restriction on utilization of credit, which means though you have huge input tax credit, when you are paying output tax, use only 99% of input tax credit and balance 1% you have to pay output tax by cash ledger. That is in rule 86B. The problem with this rule 86B was it was there in rule, but there was no backup. To have a backup of rule 86B, rather I would tell in this way, to make sure that there is a backup for your rule 86B as well as even your rule 86A, they made sure that there is a backup. One, in section 49 subsection 4, they said that there can be even restrictions for using your input tax credit and credit ledger for paying output tax. Second, they brought out something called as section 49 subsection 2, which is specifically for your rule 86B. It goes in this way. Notwithstanding anything contained in this act, government may on recommendation of council subject to such conditions and restrictions, specifying maximum proportion of output tax liability. Maximum proportion of output tax liability under this act means under CGST Act or IGST Act, which can be discharged, which means which can be paid through your electronic credit ledger by a registered person. This is nothing but a clear-cut backup for your Rule 86B. Already Rule 86B clearly said that your 99% of output tax liability can be paid by electronic credit ledger. 1% needs to be paid by electronic cash ledger. It is not applicable for everyone. Obviously, it is applicable in scenarios mentioned in Rule 86B where your monthly turnover is exceeding a particular limit, etc. etc. There are relaxation or exceptions as well. But there is a backup for what was given in your Rule 86B. Again, repeating that for your exams, whether it is section 49 subsection 2 or section 49 subsection 4 or section 49 subsection 12, they are not at all relevant. They are only corrections amendments. They are amendments in nature of certain corrections. So don't expect them for your exams. Now, the next amendment which is there in your Rule 86, which is again about your electronic credit ledger. There's a new sub-rule which is added, Rule 86 sub-rule 4B, which talks about recredit and credit ledger on payment of erroneous refund by DRC 03. So if at all you have got wrong refund, erroneous refund, and you have paid it by your DRC 03, whatever refund you have got, it will be recredited in your credit ledger. Let us try to understand that. Now this is a new provision which needs to be understood. When a registered person deposits the erroneous refund, the amount of erroneous refund which is sanctioned term, either under section 54 subsection 3, which is your refund of input tax credit in case of zero rated supplies or inverted duty structure, or 96 sub rule 3, which is nothing but refund of IGST paid on export of goods because there is a contravention in terms of Rule 96 sub rule 10. You got a refund but it is erroneous and you are paying that again with interest and penalty by way of DRC 03 challan. You are paying that, right? And that payment is by way of your electronic cash ledger. That payment is by way of your electronic cash ledger, right? This error that you have got wrong refund can be found out on its own, or it can be found out on being pointed out by the officer. Now what has happened? You have got a refund under section 54 subsection 3 or Rule 96 sub rule 3. Later on you found that there is an erroneous, it was not a refund to be taken. You paid it back by electronic cash ledger with interest and penalty, and now whatever amount was refunded earlier, what will happen is amount equivalent to the erroneous refund would be deposited by the registered person, shall be whatever he has redeposited shall be recredited to his electronic credit ledger. Whatever amount he has paid back with interest and penalty, that refund will be recredited to his electronic credit ledger by the proper officer, and the officer will recredit that in by way of PMT 03A form. That will be an order which will be in PMT 03A. Now what are they trying to tell? You applied for refund under your section 54 subsection 3, or you are talking about Rule 96 sub rule 3. Section 54 sub rule 3 is refund of your input tax credit. Either you are talking about zero rated supplies or you are talking about inverted duty structure. Only in two cases you will get the refund. And Rule 96 sub rule 3 is refund of your IGST, right, which is paid on export of goods. Automatic refund, which is paid on export of. This refund would be automatic. Automatically you will get this refund would be automatic. So you have got the refund. Step number 1, you have got the refund. Step number 2, the moment you found that it is erroneous refund, you paid it back. So first you got the refund in your pocket, you got the refund in your bank, The moment you found that there is an erroneous refund, you paid it by way of electronic cash ledger. You paid the refund amount with interest and penalty in electronic cash ledger, and they are specifying the form that it would be DRC 03 form. Then the next step is you have to get back that amount. Understand that you had some amount in credit ledger. So you had you had some credit. Right. So if I were to tell the sequence, you had some credit which you got the refund. Now you are going to pay it back. Now what they are telling, whatever refund you paid it back, but that refund was of what? Refund was either of your input tax credit or your IGST on export of goods. So first you had some credit or you paid IGST first. So that was the first process. That was the first process. Then you went for refund. Then there is erroneous refund. Finally, what they are telling? They are telling that you will get that amount. You will get the basic amount back in your electronic credit ledger. You will get the basic refund amount back in your electronic credit ledger. An officer will give an order for that. In PMT 03A. Let us assume that you had a credit of say 10 crore. So you got that 10 crore in bank. You had the credit of 10 crore. You got that credit 10 crore in bank. Now you are paying it back. When you are paying it back, you will pay 10 crore plus interest plus penalty. Now what they are telling, initially you had that 10 crore in your pocket. So initially you had 10 crore with you in electronic credit ledger. Then you got that in your bank account. So from credit ledger you got that in your bank account. Whatever you got that in your bank account, you paid it back. 10 crore plus interest plus penalty. So this effect is nullified. If you see the second step and the third step, they nullify each other. Right? You got in your bank, now you are paying it back. You got in your bank, now you are paying it back by cash ledger. Not only the 10 crore but also interest and penalty. So initially where that 10 crore was lying, this 10 crores was lying initially in your credit ledger. So what they are trying to tell, they are telling that okay, again that 10 crores should come to your, again the same 10 crores should come back to your credit ledger. Initially the 10 crore was there in your credit ledger, again it should come back to your credit ledger. So if we see, the second step and third step are connected. You got it, you paid back. And the first and the fourth step, they are connected. Initially you had it in your credit which was converted into bank, so credit was reduced, so you got in your bank. Finally whatever you have paid by bank, you have got in your bank account, you have paid it by cash ledger. So second step and third step nullifies each other. Rather third step is something more, because you not only pay the 10 crores but also you pay that interest and penalty. So whatever amount initially you had in your credit ledger, you will finally get it back in your credit ledger. The only problem that I see in this provision, this is all about the provision. We are done with this provision, rule 86. We are done with this provision. But the only problem that I see here is they also talk about refund of IGST. So there's always a discussion about refund of your IGST paid on export of goods. IGST paid on export of goods is IGST can be paid either by your credit ledger or by using your cash ledger. So you can pay this IGST either by way of your credit ledger or by way of your cash ledger. As far as you are paying it by way of your credit ledger, there is no problem. Whatever amount you are going to pay it by credit ledger, So your credit got reduced. IGST on export of goods, if you're paying by credit ledger, your credit got reduced. When your credit gets reduced and you get in your bank account, finally you pay back that with interest and penalty. Finally, you'll get back in your credit ledger. That's not a problem. The problem lies here. Whatever amount you are paying by cash ledger, what will happen with this amount? Because when you talk about the first situation, there's no issue at all, because the first situation talks about refund of ITC only. So you are talking about only credit ledger. Here the discussion is only about credit ledger, but here when you are talking about refund of IGST paid on export of goods, I can pay that IGST by credit ledger or by cash ledger. In case 1, there is only involvement of credit ledger. When I am taking the refund of ITC for zero rated supply or inverted duty structure, there is only electronic credit ledger. Here only electronic credit ledger is involved, so no issues. But when you talk about the second scenario, B, there is refund of IGST paid on export of goods, I can pay that IGST on export by credit ledger or cash ledger. If I am paying by credit ledger, this entire provision makes sense. Initially I paid it by credit ledger, my credit got reduced, I got the refund in bank account, I am paying it back by cash ledger again, finally I will get back in my credit ledger. But if I am paying it by cash ledger, then there's a problem. There's no such provision there. So if you see a note, it is important to note that erroneous refund sanction in case of IGST paid on export of goods by cash ledger. So when I am talking about IGST paid on export of goods, I can pay it by credit ledger. If I am paying by credit ledger, this provision makes sense. A part of it, if I am paying by cash ledger, then there's no such similar provision that you find in Rule 87. So that this area is not yet touched by the government. How this would be handled is not yet touched by the government. So this is an area which needs to be clarified by the government, or you might see subsequent amendments for the next attempt where they touch upon this aspect again. So that is all about your Rule 86 Sub-Rule 4B. Now, this is actually, when you talk about payment chapter, this is the only provision till now which makes sense. Because the earlier provisions, whether it was your liability ledger, Rule 85, or whether it was your credit ledger, Section 49, Subsection 2, Section 49, Subsection 4, or Section 49, Subsection 12, it was only correction amendment, not important for exams. But this amendment, Rule 86 Sub-Rule 4B for credit ledger, again makes sense for your exam question. Now you are talking about your electronic cash ledger. Electronic cash ledger, which is discussed in Section 49, read along with your Rule 87. Now, there's a new provision that they have brought in your electronic cash ledger. Very important, interesting provision that they brought in for those companies who are having multiple registration. So that provision has been brought in by way of amendment in Section 49, Subsection 10, read along with the Rule 87, Sub-Rule 14. Same thing. The powers are coming from the section and finally it is flowing in the rule. Section 49, Subsection 10 is being replaced. The old provision is deleted. If you see the new provision, it is split into two parts. Right. If you look at the new Section 49, what it is talking about: a registered person may on common portal transfer any amount of tax, interest, penalty, fees or any other payment available in electronic cash ledger to electronic cash ledger. So if you are talking about this, actually there is no amendment in this part. So I can transfer from one minor head to another minor head, whether it is of IGST, CGST, SGST, UTGST or cess. From CGST tax ledger, I can transfer it to IGST penalty ledger. So that is possible. That was already there. There's nothing new here. The new portion is now IGST or central tax. Now it is only IGST and central tax, not all the taxes. Only IGST or central tax of distinct persons as specified in Section 25, Subsection 4 or Section 25, Subsection 5. Distinct persons. Distinct persons as specified in distinct persons. So here you have a new addition that if you are talking about multiple registration, you are called as distinct person. Same company but different GST number, distinct person. So you can transfer from one GST number, IGST or CGST, tax or interest or a penalty or fees or any amount to another GST number. In such form and manner, and subject to such conditions and restrictions as may be prescribed. And obviously, as it was already previously there, and such a transfer shall be deemed to be refund from the electronic cash ledger. In this, if you are transferring from central tax to some other tax, here it is deemed to be refund. So that is nothing changed. The only new addition which is brought is you can transfer IGST or CGST, a tax or interest or penalty or fees or any amount from one GST number to another GST number, which means distinct person as per section 25 subsection 4 or section 25 subsection 5. But wait, for this particular point there is a corresponding condition. There's a condition. What is this condition? This is a new point. This is a new point that we have, and it has got a condition that this particular transfer, it has got a condition. What is the condition? If you look at the condition, it tells that no such transfer can be allowed. So such transfer cannot be there under clause B, means you are talking about distinct persons. If the said registered person has any unpaid liability, if you have any unpaid liability in electronic liability ledger, then that transfer is not allowed. So that is the condition for this. That is the condition for this C. Right. And the same thing is repeated in your rule 87 sub rule 14 by a form. The only addition that you will find here is they have mentioned that there is a form for the same, which is PMT09. So repetition, the same thing is said that how it will happen. The procedure is given in your rule 87 sub rule 14. That such transfer between distinct persons will happen in a separate form, which is PMT 09. Now what are they trying to tell? Already when you talk about transfers, when you talk about the transfer, so if at all it is within the same GST number, let us understand now. If at all it is within the same GST number, if it is within different GST number, GST number 1, GST number 2, if it is in the same GST number, then what happens is you can transfer from any head to any head, which means you have how many major heads? You have 5 major heads, being your IGST, CGST, SGST or UT, that are the 4 major heads, UT, GST or compensation cess, and 5 minor heads, each of them having tax, interest, penalty, fees, any other amount. 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 So you have 5 major heads, first 4 major heads, and each of the 4 major heads have got 5 minor heads. Now they have clearly said that you can transfer from any pocket to any pocket, no restrictions, any pocket to any pocket, any pocket. So amongst all these transfer can happen under any pocket. Transfer from any minor head to any other minor head. So that is the point here. Any minor head to any other minor head. But here they talk about only IGST and CGST. IGST and CGST. Obviously you are talking about tax, interest, penalty, fees, any other amount. 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 In the first GST number, IGST, CGST, and in the second GST number, IGST, CGST. Now what they tell, transfer from one GST number to another GST number. Transfer from one GST number to another GST number. Transfer only from CI, that is CGST SGST to CGST SGST of one GST number to CGST SGST of another GST number, and any head under that IGST interest of GST number 1 can be transferred to IGST penalty of other GST numbers. So that is the criteria, and plus there is a condition also. Here in the first scenario you don't have any condition. Here there is a condition. There should be no pending liability. No liability which is pending in electronic liability ledger. There's a condition as well. Now what is new provision is, this one is the new provision. This was the first scenario. The first scenario was already there. What is new is the second scenario. In the first scenario, you have total 20 minor heads, 4 major heads and 5 minor heads in each of them, so 20 minor heads. In the first scenario, transfer can be from any minor head to any other minor head. In the second scenario, you are talking about 2 different GST numbers. So transfer can happen only from CGST, IGST of one GST number, whether it is tax, interest, penalty, fees or any other amount, to CGST, IGST, CGST and the IGST of other head, whether it is tax, interest, penalty, any other amount. In the first case there is no condition, whereas in the second case there is a condition that you should not have any liability. So person who is transferring should not have any liability. But nevertheless, understand that when this transfer is allowed, you can even if there is liability in GST number 2 of SGST, you can use it. Let me take an example and show you. Supposing you have GST number 1 and GST number 2. You have amount in SGST, you have amount in CGST tax head, minor head. You have amount, say amount of 1 lakh in CGST tax minor head. You have this amount in your electronic cash ledger, and you have a liability. In GST number 2, you have a liability of SGST penalty. SGST penalty rupees 1 lakh. So you have liability. There's a liability. Not amount is that, there's a liability. Now you are managing your working capital. It will help you in managing your working capital. So both are 2 different GST number of the same company. Distinct persons. Now if you look at the overall scenario, you have amount in your cash ledger, but it is there in GST number 1 and it is there in CGST tax, and you have to pay something. In second GST number, and that too you have to pay SGST penalty rupees 1 lakh. So there would be 3 step. There would be 3-step process. Step number 1. Transfer from CGST tax of GST IN1 to CGST tax GST IN2. As when I said, when you are transferring between 2 GST number, you can transfer it only between IGST, CGST, SGST is not possible. So that is the scenario. So first you are going to transfer that. So from your CGST tax, GST number 1 lakh, you will transfer it to CGST tax, GST number 2. So your cash ledger CGST tax from GST number 1 will become 0, and you'll get that in your GST number 2. Step number 2. Step number 2. Transfer from CGST tax GST number 2 to SGST penalty GST number 2. So now the second transfer is between the same GST number. So it can happen between CGST and SGST also. This is transfer of cash ledger. This is transfer in amount of cash ledger. This is also transfer in amount of cash ledger. The difference is, in the first case it is between GST IN1 to GST IN2. In the second case it is between the same GST number, GST IN2 to GST IN2. Right. Now what will happen is, as I said, CGST tax in GST number 1 will become 0 and it will go to CGST tax GST number 2. Now CGST tax from GST number 2 you are going to transfer 1 lakh, so it will become 0 and it will go and sit in SGST penalty GST number 2. That is step number 2. That would be your step number 2. Step number 3. Step number 3 will be closing of liability. Now you are discharging your liability. So you are going to use SGST penalty in your cash ledger and close it against SGST penalty which is there in your liability ledger. Both are belonging to GST number 2. Both are under your GST number 2. So whatever, now finally you have in your SGST penalty GST number 2 you have 1 lakh. So from that 1 lakh you will transfer that 1 lakh, make it 0 and discharge your liability. The liability is also 1 lakh. Again make it 0. So finally what you are doing, you had 1 lakh in cash and your liability was 1 lakh. Finally you will not have anything in your cash ledger and will not have this liability also. Your cash ledger will become 0, liability also will become 0, but in 3 steps. Step number 1 was all about transfer of amount in cash ledger from first GST number to second GST number. If it is between first GST number to second GST number, you need to understand that it can be only between CGST and IGST. So CGST tax to CGST tax. CGST tax of GST number 1 to CGST tax of GST number 2. So CGST tax in GST number 1 will become 0, CGST tax in GST number 2 will become 1 lakh. Then the second step would be transfer of cash ledger between the same GST number. When it is between the same GST number, you can transfer it from CGST tax GST number 2 to SGST penalty GST number 2. Now your CGST tax in GST number 2 will become 0. Initially it was 0, it became 1 lakh, now it will become 0 and that amount will go in SGST penalty cash ledger. Finally, this is all about cash ledger. Finally you are closing your liabilities. You are discharging your liabilities by cash ledger. So now you are discharging your liability is SGST penalty 1 lakh, which you are going to close and make it 0, and you have SGST penalty in cash ledger 1 lakh, which you are going to use it and make it 0. Both are within the same GST number. So this is how I have merged both the provisions and given an example that this is how it will work. Right. So that is all about the new provision, and important and interesting provision. If ICA wants to test it, they can beautifully ask a question in detail about say 5 to 6 marks. Talking about 2 GST number, in 1 GST number there is an amount in say CGST pocket or IGST pocket, but in other GST number That's the liability of SGST. So one, you're talking about amount in cash ledger. See, liability, if you see this entire example, liability was there only in the end. Liability discharging came only in the end. So rest all was only cash ledger. So in right from the beginning, you were talking only about your cash ledger. Everywhere it was all about only in the last step your cash ledger was used to discharge your liability. Till then it was only transfer between the cash ledgers. So that is all about your amendment which is there in your section 49 subsection 10 read along with rule 87 sub rule 14. Now another amendment in your cash ledger, they have said that when you are talking about your online mode of payment, they have added your online mode of payment. Basically, when you are talking about online mode of payment, basically initially it was internet banking or debit card or credit card. Offline was NEFT, RTGS and over the counter payment by cash, check or demand draft. But when you are talking about over the counter payment by cash, check, demand draft, there was a limit of 10,000 per tax period per challan. Now, we will not enter inside it. We are talking about mode of payment in cash ledger. How you are going to make the payment in cash, how you get the amount in cash ledger. So one, that is online payment, other is offline payment. Online payment had internet banking, debit card, credit card. Now what they have done is they have added UPI payments, unified payment interface from any bank, IMPS from any bank, immediate payment services from any bank, and there is a corresponding amendment in your rule 87 sub rule 5. So basically what they have done is they have added to the online payment modes. Online payment modes were internet banking, debit card, credit card. Now your UPI payments, unified payment interface from any bank, or IMPS, immediate payment service from any bank, is added to your online payment mode. So when you are talking about your online payment mode, two modes are added, and when these modes are there, it is without any limit. It can be 10,000, 1 lakh, 10 lakh, 1 crore, 10 crore, 100 crores, irrespective of any amount. The limit is only there for offline payment, and that too only for over the counter payment, not for NEFT and RTGS, only for over the counter payment by way of cash, check or demand draft. Only that there's a limit of rupees 10,000 per tax period per challan, and that too you have certain exceptions also there. So that is all about your rule 87 sub rule 3. Now moving on to a very important amendment which is you can highly expect in your exam question paper, is about interest on delayed payment, section 50. For the first time, for interest on delayed payment, you have got a rule. Initially it was only gone by section 50, now it is gone by section 50 read along with rule 88b. So for interest, initially it was only section 50, now you have section 50 read along with rule 88b. Now interest was there and split into two parts. Interest, when you are talking about late payment, that remains the same, no change. The change is only in section, there is no change in section 50 subsection 1 and section 50 subsection 2. Interest for late payment. The change is only there in section 50 subsection 3. Now you are talking about interest in case of your excess input tax credit. So when you are talking about section 50 subsection 3, interest in case of ITC wrongly availed and utilized. Wrongly availed and utilized. So that provision is entirely replaced. The new provision stands as where the input tax credit has been wrongly availed and utilized. Wrong availment will not cause any problem. Wrongly availed and utilized. If at all it is only wrong availment, nothing will happen. Wrong availed and utilized, the registered person shall pay interest on such input tax credit wrongly availed and utilized at such rate not exceeding 24%. So though it is telling that not exceeding 24%, the interest rate notified is 18% per annum. Now a very important point, all the amendments, as I said, has got a note of from which date it is effective. This particular amendment is retrospectively effective from 1st of July 2017. 1st of July 2017. Though it has been brought only now, you will find that it is applicable from right from 1st of July 2017. Retrospective effect. Because department officials have been giving notice left, right, center to make sure that there is no impact even for the old period. There is a retrospective amendment, though it has been brought in 2022, but It is retrospectively effective from 1st of July 2017, the date when GST came out. Now coming back here, when your ITC is wrongly availed and utilized, you need to pay interest on that at a rate not exceeding 24%. The rate is now 18%, right, in a manner as may be prescribed. So how it will be calculated is given in rule. Now when you talk about the term prescribed, you need to see the rule. So how interest will be calculated is given in rule 88 sub rule B. Rule 88 sub rule B. The first two parts talk about a normal scenario which was already discussed. No change. No change. New. The first two parts is all about interest on late payment of taxes. Here it is interest on ITC wrongly availed and utilized. So there is no change in the first two parts. Rule 88 capital B, though this rule is recently introduced, but the manner of calculation, the first two parts is not changing. It is as good as it was given in section 50 subsection 1 and section 50 subsection 2. So there is no change. There is no change when you talk about the first scenario where there is interest on late payment. So there is no change basically when you talk about interest on late payment of taxes. The change is only when you talk about ITC wrongly availed and utilized, interest on that, there is a change. Now we'll see only the change portion. If you look at the wordings, where interest is payable on input tax credit wrongly availed and utilized in accordance with section 50 subsection 3, interest shall be calculated on the amount of input tax credit wrongly availed and utilized from the period starting from the date of utilization. Interest will start from the date of using the credit, not availing it. Not you would have availed it, but if you have not used it, no interest. Interest will start from the date of utilization of such wrongly availed input tax credit till you are making the reversal of the credit or paying the tax in respect of such reversal. So important point is interest will start from the date of utilization. Till date is very clear, till the date you reverse it or you pay it by tax. Right, from date is important. Now there is an explanation for the purpose of this sub rule, that is rule 88B sub rule 3. Input tax credit wrongly availed shall be construed to have been utilized when it is said to utilize. When you can tell that you have availed wrong credit and now it is also wrongly utilized. When the balance in electronic credit ledger falls below the amount of input tax credit wrongly availed. If at all you have availed wrong credit of 10 crore, but your credit balance remains always more than 10 crores, you have not used it. But if it falls below 10 crores, only then you have said to use that credit, and only to that extent of utilization, not entirely you have used it, only the extent of such utilization shall be the amount by which the balance in electronic credit ledger falls below the input tax credit wrongly availed. Supposing I have availed wrong credit of 10 crores. This happened in somewhere in April 2022. Now my credit is say 11 crore, it increases 12 crore, etc. Suddenly it comes to 8.5 crores. It comes to 8.5 crores only say in December 2023. Let us take extreme, say 23 after next year. So it was that. Now wrong availment happened right in the beginning. This is my credit balance. This is 10 crore wrong availment. This is my credit balance. But my credit balance, my electronic credit ledger was always having that amount more than the wrong availment. Wrong utilization happened only when my credit balance fell below 10 crores. What was the wrong availment? If I tell my wrong availment was 10 crore in April 2022 and my credit balance was always more than 10 crores throughout this period. My credit balance was always more. For the first time it fell below 10 crores. in December 2023. Only now my credit is said to be wrongly utilized. Only and only now my credit is said to be wrongly utilized. So wrong utilization happens only now. So when I'm calculating interest, when I'm working out interest in this case, interest here, first of all, how much wrong utilization has happened? Wrong utilization has happened now, and this wrong utilization has happened only to the extent of 1.5 crores. Still I have not fully, it's not wrongly utilized, full amount is not wrongly utilized, it is only to the extent of 1.5 crores. So my interest calculation will be 1.5 crores multiplied by 18% per annum. Starting date, you require from date and to date. For number of days, you require from date and to date. From date will be December 2023. To date will be till the date of reversal. So, though I took this credit long back in April 2022, but my wrong utilization happened only in December 2023. So, my interest will start only from December 2023. My interest will start only from December 2023, first thing. And secondly, my interest will be only on 1.5 crores because wrong utilization is not of full 10 crores. As of now, my credit balance is still 8.5 crores. So wrong utilization is only of 1.5 crores. So that is what this explanation is trying to tell. So there is another point which is there in the same explanation. The date of utilization of such input tax credit shall be taken to be when you are talking about when this credit needs is understood to be utilized. What is the exact date of it? Now you have roughly understood that it will be December 2023. So what is the exact date? The date on which the return is due to be furnished under section 39 or actual date of filing of the return. If at all you are reversing the ITC return, simple understanding. If you are reversing that credit, if you are reversing that, that amount in your return, right, then you are talking about the date on which the return is due to be furnished under section 39 or the actual date of filing of the said return, whichever is earlier. If at all, in case you are talking about balance in electronic credit ledger falls below the amount of input tax credit wrongly availed on account of payment of said the tax in the said return. If you are reversing the credit in return, if at all you are reversing that excess credit 1.5 crores in return, in that scenario the date of wrong utilization would be the due date of that return or the actual date of that return, whichever is earlier. If at all I am reversing the credit in my return, what is the actual date of utilization? That is the actual date of return in which I am reversing the credit or the due date of return in which I am reversing the credit, whichever is earlier. If at all I am reversing the credit by your DRC03 challan. So date of debit in electronic credit ledger when the balance in electronic credit ledger falls below the input tax credit wrongly availed in other cases, in all other cases. When they are talking about in all other cases, here it means that you are talking about a scenario where you are reversing the credit by DRC03 challan. DRC03 challan. So if you are reversing by way of DRC03 challan, then the date of debit in electronic credit ledger when the balance in electronic credit ledger falls below the input tax credit wrongly availed in all other cases. One is through return and other is not through return. Now to understand this more clearly, because this theoretical portion is quite tricky, to understand this clearly, let us take an example and understand what they are telling in the provision and in the explanation. So we are talking about ITC wrongly availed and utilization. Wrong availment will not cause a problem, utilization will cause a problem. Wrong availment of ITC is in April 2022, the return of which is filed on 25th of May 2022. So wrong availment is of 1 lakh. Balance in electronic credit ledger till 25th of November 2022. So I have taken wrong credit of 1 lakh and my balance in electronic credit ledger till 25th of November remains 1,25,000, which means the credit is wrongly availed but not utilized. So I am not going, interest is not going to start. Now my balance in electronic credit ledger on 25th of November after filing October return. So the moment I file October return, now my balance is falling. My balance is falling below that 1 lakh. Now the balance in my electronic credit ledger is falling below that 1 lakh because of my filing of return. Because of my filing of return. So keep that in mind. Next, balance in electronic credit ledger till 18th of February 2023. So my amount is now more than 75,000. I have wrongly utilized. Here understand that wrong utilization is only, as of now, it's only of 25,000, not entire 1 lakh. Now my balance in electronic credit ledger is always more than 75,000 till 18th of February 2023. Now my balance in electronic credit ledger on 18th of February 2023 after filing January return, I don't have any balance in my electronic credit ledger. Now understand that again my balance in electronic credit ledger is reducing because of my filing of return, and this time wrong utilization is of 75,000 because my amount in credit ledger is now becoming 0. Now the final point that I am trying to tell, I came to know about this wrong availment and I am paying by reversing in my return or by voluntarily paying through DRC 03 challan. I am paying that on 29th of September 2023. So till date is simple. My interest will be computed till 29th of September 2023. Let me calculate interest in two parts. First part is on 25,000. Second part is on 75,000. First part is on 25,000. Second part is on 75,000. In both the cases, it is 18% per annum. And in both the cases, denominator would be multiplied by days divided by 365. Now, what is the from date? What is the from date? So, I am calculating interest in two parts. Because when my wrong availment was of 1 lakh, in the first time, my credit fell below, when my credit fell below 1 lakh, the credit was 75,000 and it remained more than 75,000 for some time. So first part, my wrong availment of wrong utilization of credit was only of 25,000, because though my credit came below 1 lakh, but it was 75,000 for another some time. In the second time, my credit came below 75,000 and it became 0. So wrong utilization was 75,000. It can be in multiple parts. It can be more than two parts also. It's second time also my credit came below 75,000, but it is remaining at 50,000. So now again interest will be on 25,000. Likewise, it can happen in multiple parts. I have made it simple. We are talking about two parts. So my interest calculation of wrong availment is on two parts. In both the cases, please understand that when you are talking about till date, when you are talking about to date is 29th of September 2023. My to date is 29th of September 2023. Why? Because I have reversed. I realized that I have taken extra ITC and I have reversed in my August 2023 return, or I have reversed by paying voluntary to DRC 03 challan on 29th of September 2023. So my to date is fixed. What we need to understand is the from date, from where it will calculate. In the first case, when I have wrongly utilized 25,000, when my credit balance came below 1 lakh, it was when I was filing my return. Which return I was filing? I was filing my October return. Now I need to check the actual date of October return filing. Actual date of October return filing is 25th of November 2022, or due date of October return filing, which is 20th of November 2022, whichever is earlier. So my calculation will start from 20th of November 2022 to 29th of September 2020. So in the first part, interest calculation is this way. In the first part, interest calculation comes in this particular way. 25,000 multiplied by 18% divided by 365. It will start from 20th of November 2022 and it will end on 29th of September 2023. The second part, my second part, wrong utilization of credit, which was of 75,000, was again when I filed my return of which period? I filed my return of January period. So when I filed my return of January period, what is the actual date of January return? Actual date of January return is 18th of February 2023. What is the due date of January return normally? 20th of February 2023. So it is whichever is earlier. Which is earlier? 18th of February 2023, actual date of January return, or due date of January return 20th of February 2023. It is 18th of February 2023. So my second part of interest would be calculated in this particular way. 75,000 multiplied by 18% that which you are seeing. Number of days divided by 365. How we will calculate number of days? It will start from 18th of February 2023 till 29th of September 2023. You need to find the number of days which you will find and do the workings. So please understand that interest is not on wrong availment, it is only on wrong utilization. When is wrong utilization happening? When my credit balance comes below the amount which is wrongly availed, and only to that portion the wrong utilization is actually happening. Only on that portion interest will be calculated. And if my credit card balance comes below the amount of ITC availed, if it happens by return, then from which date it will start? When you call that date of wrong utilization, it is actual date of filing of that return or due date of filing of that return in which my credit balance comes below the amount of input tax credit wrongly availed. So this explains this example number 1. Now example number 2, what I have done is I made a small change. What is a small change in example number 2? If you see the example 2, you will find the basic working the same. You are again talking about wrong availment and utilization of ITC. One small change that you have done in example 2 is, this time when my credit balance which I have wrongly availed comes below that amount, it is not because of filing of return, it is because of DRC 03 challan. Let us try to understand this. My wrong availment of ITC in April return, which is filed on 25th of May, is 1 lakh. Wrong availment will not cause any interest. My balance in electronic credit ledger till 25th of November remains more than 1 lakh. It's more than 1,25,000, so no interest. My balance in electronic credit ledger on 25th of November, when I am paying my old dues by DRC 03 challan, it comes down to 75,000. Now understand that there is wrong utilization of ITC, and that too it is only 25,000 because my credit balance is falling below 1 lakh but not entirely, so it is 25,000, and it is not because of my return. This time when my credit balance is falling below 1 lakh, it is because of DRC 03 challan. So if I were to understand this first part of interest, it is pretty simple. It is on 25,000 multiplied by 18% per annum divided by number of days is 365, and here also I am reversing that excess availment of ITC later on, either by including, see, when I am finding that excess availment is happening, I may reverse it by way of return or I may pay it by way of DRC 03. That doesn't causes any change. That is done on 29th of September 2023. So the last date is simple, 29th of September 2023 till the actual date of reversal, whether by return or whether by DRC 03. So actual date of reversal is whether by return or DRC 03 will not make any change. But from which date this wrong utilization is actually happening? This time my balance in electronic credit ledger is falling below 1 lakh, not because of filing a particular return but because of paying my old dues by DRC 03 challan. So this starting date would have been your 25th of November 2022. 25th of November 2022. So this would be the first part. The first part would be on my 25,000, 18% multiplied by number of days starting from and divided by 365. That number of days will start from 25th of November 2022, which is when my credit balance falls below the wrong availed ITC. But that is not because of filing a particular return, that is because of filing DRC03 challan till the actual date of reversal. That actual date of reversal may be happening through return or through DRC03, that really doesn't make any difference. Now, the next part. Now, my balance in electronic credit ledger till 18th of Feb 2023 is up over and above 75,000. Suddenly, my balance in electronic credit ledger becomes 0 on 18th of February 2023 because I am paying my old dues by DRC03. Now, this time, my wrong utilization of ITCs of balance 75,000. 25,000 is already wrongly utilized, now it is balance 75,000, and again this amount, my ITC amount is reducing not because of filing a particular return, it is reducing because of paying the old dues by DRC03 challan. So the second part of interest would be taking that 75,000, which is now wrong utilization of ITC, multiplied by 18% per annum, divided by 365, but the end date would be the date of actual reversal, whether by including in return reversal of ITC or whether by paying by DRC03 the reversal of ITC, that is 29th of September 2023. From date here is date when I am paying the old dues by DRC03 challan. So this time my credit balance has reduced not because of filing a particular return but because of DRC03 challan. So it is the same date, 18th of February 2023. The second part would be 75,000 multiplied by 18% multiplied by number of days divided by 365. How you find that number of days? When my credit balance has reduced below 75,000 by because of DRC03 challan, that particular date till the actual date of reversal. So you add both, you will get the final answer. So this is how you calculate the interest in this case. Things are not so simple as it is for your interest for late payment of taxes. Things are a bit different here. Obviously, you can expect questions from this area by ICI coming attempt. Highly possible. So when you're talking about interest, it is basically interest due to delayed payment of taxes. Second is interest due to ITC wrongly availed and utilized. There is no change here. In the first part there is no change, whatever was the discussion is same. This one is a new provision. So where you are talking about interest because of wrong availment and utilization of ITC, there's a huge change. You can surely expect questions in this area. The summary of this particular point is interest will start only on wrong utilization. So interest will be on ITC wrongly utilized. Interest will be on ITC wrongly utilized multiplied by 18% per annum multiplied by a few days divided by 365. Till date is date of reversal, whether in return or whether by way of DRC03 challan. From date is two different dates. If at all your ITC falls below the wrongly availed ITC because of filing a particular return, or it falls below the wrongly availed ITC because of paying old dues because of filing DRC03 challan. If it is your ITC wrongly availed is falling below that amount because of a particular return, then it is actual date of that return or due date of that return, whichever is earlier. If your ITC which is wrongly availed, that amount in electronic credit ledger falls below the amount of ITC wrongly availed, your balance in electronic credit ledger falls below the amount of wrongly availed ITC because not because of filing a particular return but because of paying old dues by DRC03 challan, then the from date is from that is payment by DRC 03 challan. So that is how you have to understand. And another important aspect here is when you talk about ITC wrongly utilized, it is not the full amount. It is what particular amount? Your ITC wrongly availed amount till the new balance of credit ledger. So if at all wrongly availed ITC is 1 lakh and your ITC balance falls below 1 lakh but it remains at 75,000. So ITC wrongly availed is 1 lakh but wrongly utilized is only 25,000. Wrongly utilized is only 25,000. Right, so it is ITC wrongly availed minus balance in electronic credit ledger. If it is falling below ITC wrongly availed. If it is falling below ITC wrongly availed. So if ITC wrongly availed is 1 lakh and a balance in electronic credit ledger comes below 1 lakh, it is 75,000. So ITC wrongly utilized is ITC wrongly utilized. So ITC wrongly availed is 1 lakh. Now balance in electronic credit ledger falls below 1 lakh but it is now 75,000. So ITC wrongly utilized is only 25,000. That is how you need to understand. And the same analogy we have applied in these two examples. Actually, when you see these two examples and understand all the ifs and buts, you are very sure of what is section 50 subsection 3 and of what exactly is your new rule 88 capital B. Basically, we are not talking about rule 88 capital B 1 and 2. We are talking about rule 88 capital B 3 with 2 explanations. So focus is on rule 88B capital B sub rule 3 and the 2 explanations attached to this sub rule 3. That is what we have understood. Please make sure that you are very clear with this provision. Highly expected that you will be getting a question on this when you talk about interest on ITC wrongly availed and utilized. And it is not so simple. It has got its own beauty and we have understood all the ifs and buts of the same.